Welcome back everyone, and wish you have an amazing weekly session. Markets woke up to the news that the 40-day US government shutdown, which has been delaying important data releases such as the non-farm payrolls report, is about to end as the Senate is moving forward with a legislation that could extend funding at least till the end of January. The US dollar lost some momentum in the aftermath, helping both the euro and the British pound to gain some ground, but gains in those markets have been quite muted, and even gold, which rose at a faster pace, is still within a caution zone. So let's have a look at what the chart suggests. Then looking first at euro dollar, we can see that last week's rebound has been quite encouraging near a low of 1.1467. But looking to the upside, the pair is still constrained below its 20 and 50-day moving averages. It has already posted a new lower low, so the trend seems to be leaning slightly to the downside, and perhaps a faster rally is needed above the 1.1665 territory in order to rise faster towards the next barrier seen between 1.1760 and 1.1780. We can see that the 1.5065 and 1.16 territory is currently acting as resistance. So if that barrier holds, we could see a pullback towards the 1.1450 territory, where the lower band of this short-term bearish channel is placed, while a faster decline could even reach the 200-day moving average. Potentially, it could test this line near the 1.1360 zone, where this ascending trend line coming from the end of 2024 is also placed. Well, from a technical perspective, we can see that the risk is still skewed to the downside, since the RSI has yet to rise above its 50 neutral mark, and the stochastic oscillator is already very close to 80, suggesting that perhaps upside momentum may lose some pace, may not be strong in the very short term. And as regards calendar events, there are no important data releases out of the Eurozone. There is the release of second estimates of GDP growth, and since there was some optimism about the Eurozone economy, perhaps the data may attract some attention on Friday. Estimates or forecasts suggest a steady growth of 1.3%, and perhaps any positive surprises there could be still enough to boost the euro. Otherwise, the pair could remain, momentum could stay weak. Now looking at pound dollar, well, the pair also had an encouraging rebound last week, just around the 1.30 level, but as in the case of euro dollar, pound dollar is also constrained below key levels, particularly still trading below its 20 and 200-day moving averages and beneath this resistance trend line, all seen currently between 1.3255 and 1.3290. So we need a clear, decisive close above this territory in order to head higher, and particularly towards the next barriers in between 1.3390 and 1.3435. Perhaps another decisive close could upgrade the short-term picture. Otherwise, if we stay beneath the 1.3145 or 1.3165 territory, which coincides with the 38.2% Fibonacci retracement level of the 2025 up leg, then we could see further weakness, probably back to 1.30 and even lower to 1.2945. That's where the 50% Fibonacci level is placed. And looking at the trend, this has also weakened. We have a new lower low now, so trend signals might be quite important in the coming sessions. If we fail to hold above 1.2945, then the next target could be 1.2870, while lower than that, there is a key support trend line seen around 1.2760. That line is drawn from the lows of 2022. And finally, looking at gold, which staged a much faster rally today. It's back above the 4,000 level, but looking at the chart, the 20-day moving average remains a key constraint just around the 4,080 level. I would also like to see a clear close above the 4,130 mark, because that's where the 23.6% Fibonacci retracement level of this outlook is located. So perhaps a clear close above it could boost market sentiment, driving the price straight to the next obstacle at 4,255. Then beyond that, I expect another test near all-time highs, just around the 4,400 psychological mark, before all the attention turns to this resistance line, which connects previous highs at currently seen between 4,500 and 4,535. Well, from a technical perspective, if we look at the indicators down here, we can say that there is optimism of for a bullish continuation, since the RSI has just is progressing above its 15 neutral mark, is not close to overbought levels. Likewise, the stochastic oscillator keeps trending up and is still below 80. So there is some optimism for perhaps that some optimism that positive momentum could remain in play in the coming sessions. However, if the price fails to close above this key obstacle over here, we may see a downside reversal, perhaps another test within the double bottom area of 3,930 and 3,970, while lower than that, the 50-day moving average and the 50% Fibonacci of 3,845 may attempt to pause the slowdown. If not, then that could cause some outlook deterioration, likely squeezing the price towards the 3,730 territory. So that's everything I wanted to share with you guys. If you liked my video, please subscribe to this channel. We'll be back next. Our next session is on Thursday, so we'll be back with more technical updates soon. So that's all from me for now. Thank you for watching, and see you next time. Bye bye for now.